this hour. Yu-Dee Chang, principal and also chief advisor at ACE Investment Strategist, joining us live out of Washington, D.C. Yu-Dee, good to see you. You were listening in to that press conference. I mean, what do you think? These guys are huddling, talking about $40 billion or 31.5 billion euros that should have gone to Greece already. Just hours ago, the parliament there approved 2013 austerity budget, additional budget cuts worth about 9 billion euros, but still no money. What's going on?
Yeah, you know, Martin, first of all, good morning. But that's exactly what we've been talking about, right? I think they're saying the right thing. They're doing the right thing. However, by saying and doing so, doesn't mean they can take care of the problem. It's just a very tough situation there. I think without the world growth to get enough revenue, it's just going to be very difficult to take care of the problem. So I think it's going to be a lingering problem that we'll continue to hear and see, you know, for the month to come. I'm not convinced that they will be able to really take care of this matter. So the problem of Greece defaulting, even getting out of the EU, is still very much there.
Okay, and this is the ironic thing, you know, it's not just Greece. We've been waiting on Spain to go hand in hand and ask for aid money, but they continue to insist, we're fine, we don't need the money. But I mean, the whole quantitative easing program by the ECB hinges on that happening, and it's not.
Right, it isn't. I mean, right now, you think about, you could print unlimited amount of money, but eventually, you know, a patient still has to heal. Rather than you could keep injecting all kind of penicillin or steroid, but eventually he still has to heal by kind of sort of on this support system here. It's just not healing, and that's the problem we're having with entire Europe. You think about the strongest economy there, which is Germany, right, is really started getting affected. They're projecting next year the strongest economy in Europe, Germany, with a 1% GDP. So how are you going to survive? Well, how are you going to strive on that? It's not going to be a problem that's going to be easily taken care of.
So there's the thing on the ground. The fundamentals in Europe are likely to deteriorate further. You mentioned flagging slowing growth over in the #1 economy there, Germany. This is going to happen at the same time as, even if we get a grand bargain in the U.S. on the fiscal cliff, there is going to be fiscal drag. So you asked a very key question: where's the growth going to come from for corporates? Where is it going to come from?
Yeah, it's very difficult too, right, in the U.S. Well, fortunately, I think this third quarter, the earnings weren't that good, the growth wasn't that good, but projecting forward to, yes.
Yu-Dee, excuse me, pardon me, I want to interrupt you. Christine Lagarde, the head of the IMF, is speaking. Let's listen in to her, then we'll get back to you in just a bit. Here we go.
From the perspective of debt sustainability, which is also an important matter for us, which takes me to my third point. From the IMF's point of view, it's critical that all chapters of the book be not only opened but closed satisfactorily. That means the fiscal commitments, the structural reforms, the financing, and the debt sustainability analysis, which we will clearly come back to with additional work to be done in the coming days. Thank you.
Merci, Oli. Thank you, Jean-Claude. Ladies and gentlemen, in fact, Jean-Claude Juncker rightly drew your attention to the reform programs of the Netherlands and France, which we discussed.
Olli Rehn there, the EU Commissioner. Before that, you're listening to the IMF Managing Director, Christine Lagarde. Yu-Dee Chang still with us out of D.C. Yu-Dee, I mean, this is an incredibly messy situation, because with regards to Greece, what we just first started talking about, the IMF is insisting on a second haircut on Greek debt. That's something the ECB doesn't agree on. Some donor countries as well. I mean, this is extremely complicated.
Yeah, it is very complicated. Basically, they're saying you have to get your act together before we'll give you more money. But the Greece people, they're saying enough already. You've taken away all the benefits that we have, and you want to raise taxes on all this austerity. It's just not sustainable. You know, to us, it's the same old problem. Again, you know, they're saying the right thing. They're trying to get together and do the right thing. But just because they're saying the right thing doesn't mean they have the ability to do so. And that's what's remained to be seen. I think it's still going to be a big problem there. Yeah.
Yu-Dee, let me ask you, we've got this divide between the IMF. We just saw Christine Lagarde there. They feel like too much austerity, it's damaging for the economies, and perhaps Greece needs to be given a little bit more wiggle room. Brussels, not so much. We just had Jean-Claude Juncker saying revised fiscal targets for Greece would be appropriate. Do you think they're starting to soften a little bit, and they might give Greece a little bit more room?
Yeah, I think that's what they come to realize. Basically, you can't ask Greece to do the impossible. They're already pretty much doing all the things that you're asking them to do. But if you think about it, it's a problem that cannot be solved. Basically, the only way to do it is for them to be bankrupt, right? But it's something that they've come such a long way right now at this stage. They just do not want to take that consequences. So they're sort of struggling on. You're absolutely right. I think the fact of the matter is they'll probably have to relax the requirement a little bit and continue to print more money to give it to them in order to solve the problem.
Okay, let's talk about what lies ahead of us this week for Greece. They've got a €5 billion debt payment that needs to be made. They can raise about $3 billion of that through a bond issue, but there's a shortfall of about $2.5 billion. What happens if they can't make it and they default? From an investment perspective, what would it mean for risk appetite in the markets?
Well, I think for the very short-term basis, the immediate reaction is probably not going to be very good. But the point of the matter is, I think a lot of this is factored into the market too. Like in my own mind, I'm saying, well, if Greece defaults, that's something that I'm already accounted for. So I don't think it's going to have an everlasting effect. I think right now, turning attention back to the U.S. a little bit, I think the fiscal cliff is where everything lies, is where everything hinges on, rather than just Greece with a European problem.
We'll get to the fiscal cliff in just a bit, but how have you hedged in your portfolio, Yu-Dee, against the eventuality of a Greek default? What have you done?
Yeah, you know what? If you think about it, there's issues, there's a lot of so-called U.S. issues or stocks that's pretty much interrelated to the Europeans. Stocks such as even as IBM or Procter & Gamble, because they're selling overseas. But there are also companies that's a little bit less prone to the so-called overseas effect or overseas revenue. I think one way for people to be a little bit more cautious, if you have to be in the market, is to sort of get away from those issues. But I think basically, considering the so-called ongoing debt problem in Europe, considering slowing down economy in China, considering the fiscal cliff coming up in the U.S., I think generally speaking, it's better for people to be a little bit cautious right now and actually keep the powder dry. I think that's what we're seeing in the markets these days.
Yeah, there's a lot of dry powder out there, Yu-Dee. Thank you so much. Yu-Dee Chang of ACE Investment Strategist joining us there. And we've got a lot more to come with him. He's our guest host, so if you have any questions, do send us an email. The address is squawk@cnbcasia.com. You can also get us on Twitter, my handle @LisaCNBC. Stay with us. Squawk Box will be back after this. It's a Tuesday morning. Welcome back to Squawk. Let's take a look at the Dow heat map. As you can see, we're split pretty much down the middle, which is reflected in the overall movement of the Dow. It went nowhere last night as investors are just worried about one thing after another. Let's bring in Tim Travis now. Tim is the CEO and founder at Investment Advisor, TNT Capital Management firm from California. And still with us is our guest host, Yu-Dee Chang at ACE Investment Strategist in Washington, D.C. Tim, let's kick this off with you. A couple of minutes ago, Yu-Dee was saying, you know what, right now, probably with so many uncertainties looming out there in the market, investors should keep their powder dry. You like deeply undervalued securities. Tell us where you see the opportunities in this market, and is there enough risk appetite for investors to be going in to this area?
Sure. Well, I think there's very few areas of really good value right now because the markets have appreciated quite a bit. But where we do see tremendous value is in the financials. Companies like AIG, Citigroup, Bank of America, these are stocks that are trading at large discounts to tangible book value, which is kind of a proxy for liquidation value. And despite that really cheap valuation, they're also very profitable businesses doing quite well, and that profitability is likely to increase over the next couple of years. So those are wonderful opportunities to do well in this challenging market.
All right, you like financials?
Yeah, Tim, Yeah, Tim, well, financials, I think as a trading vehicle I do, but with the Dodd-Frank, the implementation of it, financial as an investment, I actually don't. Tim, I do have a question for you. You know, according to your valuation model, how much of it does get affected if somehow the tax gets raised on dividends on capital gains?
Well, I mean, not that much, because those companies that I named, they're not really paying much in dividends right now. And beginning of next year, the CCAR process, the CCAR, will go through, and that'll really determine how much they can allocate to dividends and share buybacks. So if the dividend tax rate hike is prohibitive, I'd expect to see larger share buybacks. And at discounts to tangible book value, that's actually going to increase my estimates of the intrinsic value of those businesses. So it's an impact on the overall market, but these companies should be fine despite that.
Okay, good ideas. Listen, Tim, we got to go. Do it again soon. Thank you for your time. Tim Travers, TNT Capital Management. And we're back with our guest host, Yu-Dee Chang, ACE Investment Strategist. Got a question? Email us at squawk@cnbcasia.com. Still ahead this morning, we'll hear from the co-CEO of mobile services provider NQ Mobile and talk about the company's latest earnings. When we come back, don't go away. Welcome back. Tuesday here on Squawk Asia. Japan could be looking at a December election. That's according to the country's Kyoto news agency. The prime minister has been under pressure from the opposition to hold early polls. A slow start to India's 2G auction, only about half the target value of bids received. And shares of RIM, the BlackBerry maker, is getting a boost after setting a January 30th date for the launch of the BlackBerry 10. All right, so we've got just a so-so lead for Asian markets. Just a go-nowhere session on Wall Street overnight. Very thin volumes. After the bell, though, we had earnings out from NQ Mobile. That's a mobile services provider. China's #1 mobile phone security company, in fact, says revenues rose to 127% on year, third quarter, to nearly $26 million, beating the company's guidance for the current fourth quarter. The one we're in right now, the company expects revenues to clock in at between $28.5 and $29.5 million. Separately, the company announced plans to acquire a controlling stake in Beijing Feilu Jiutan Technology that it does not already own. Hope I didn't massacre that. For more, let's, in a first on CNBC interview, talk to Omar Khan. He is co-CEO at NQ Mobile. He joins us live out of New York. Ticker symbol there is NQ. And so with us as our guest host, Yu-Dee Chang, ACE Investment Strategist over in Washington, D.C. Omar, good to talk to you again. I think last time we caught up was about 6 months ago. So nice numbers on the earnings. Congratulations on that. Let's get right to this acquisition. Supposed to be earnings accretive starting next year. I know that. This is so you guys can push out more into mobile internet services, correct?
Absolutely, and I caught that. It is a mouthful. I just call them Feilu. So it's a great acquisition for us. We're excited about it. We announced our intent to acquire Feilu Technology this morning and in Asia. What they are is a leading mobile interest-based community platform. So what they've got is they've got 57 million registered users and 12 million active users. What they do is they engage users in these communities that are targeted around things like mobile technology, healthcare, and automotive. When they bring those users in with content and forum-based engagement, they're able then to convert them for third-party app developers, for gaming developers, as well as for merchants, and be able to monetize those users through things like virtual currency, virtual good sales, as well as advertising. So it's a great complement to what we bring to the table, because we provide services that are trust and security-based, and we have a very, very great user acquisition, engagement, and monetization engine. What Feilu does is brings us the capability, in addition to the fact that we do carrier billing and subscription billing, now we can do things like virtual currency, virtual gaming, as well as advertising, and also broaden the services that we can offer those customers.
Okay, all right, so it sounds like a pretty good story, breaking this down into verticals like that and monetizing from there. I got to ask you, how is this being funded?
So we're going to fund this as an all-stock transaction, and it'll be broken up into two pieces, an upfront payment as well as an earn-out. And obviously, we'll provide some additional details of that as we expect the acquisition, as I mentioned, to close by the end of the fourth quarter this year, and we do expect it to be earnings accretive next year. So we're excited about the growth prospects of the business, and we provided guidance for next year. I think you mentioned our strong quarter that we just delivered. It's the sixth straight quarter for us since going public of exceeding the high end of our guidance and as well as raising. So we've provided guidance this year of 90 to 91 million in revenue, and next year of 150 to 155 million in revenue, and that does not include Fei Lu. So we're expecting very strong growth. Last year from 41 million this year to 90 to 91 million, and continuing that growth trajectory into next year.
Yeah, Omar, you guys obviously do very well in China, but where are you seeing the most growth outside of China? Which markets?
That's a great question. Actually, I mean, we've put our dual headquarters structure in place. I sit in Dallas, Texas. We're opening up we've officially opened up our Dallas office. We're having the grand opening in Dallas this week on Thursday. And we're really seeing strong growth in the U.S. We've launched a couple products first in the U.S. this year, one around privacy. So as I mentioned earlier, we've expanded beyond just core security into what we call the trust services platform. And what that is that includes privacy services. So I think when I was on with you probably 6 months ago, I mentioned a product called NQ Mobile Vault, which is a consumer encryption technology that allows people to protect their content on their devices. In addition, we had a very exciting launch just here about a month ago called NQ Family Guardian, targeted at parents with teens buying their first smartphone. 58% of teenagers in the U.S. have smartphones, and it's the fastest growing demographic, and parents are looking for solutions. So my 10-year-old, who's a bit preteen still, has his first smartphone, and he's got NQ Family Guardian installed on that product. And what it allows me to do is turn him into a responsible cyber citizen. It helps me manage. Yeah, I mean, it helps you manage.
When we were growing up, right?
Well, I mean, yeah, my 6-year-old twins, by the way, are begging me for smartphones. So I can't even imagine the day when my 6 or 7-year-olds will have smartphones. So, I mean, I've been in the mobile technology industry for nearly over a dozen years, and the paradigm has shifted so much. I used to bring home phones when I was at Samsung, and I had 6 phones at any given time. I'd hand them to my daughter, who was 3 at the time, and she'd start touching it, and she'd start flicking back and forth. She said, "Daddy, this phone is broken," and it's because it was a touch phone. Our kids are growing up with a completely different paradigm, and this solution helps me keep our kids safe. It helps me manage his text messages, his photographs, his location, and his internet surfing as well.
Omar, let me ask you very quickly. Right now, most of your clients are individual consumers. It's consumer-focused business. What about companies? Are they starting to get on board when it comes to mobile security?
Absolutely. So that's a great question. Just a couple of quarters ago, we announced an acquisition of a company called Nation Sky in China, which is a mobile managed services provider. Gartner calls that a very, very large industry, multi-billion-dollar industry. And they've got over 1,000 enterprise customers. They delivered, out of our results that we delivered, enterprise was about $4.5 million of the revenues that we delivered. We've got some of the largest multinational enterprises in China as customers. In the last quarter, we have Johnson & Johnson, Pfizer, Ping An Insurance, Petro China. So no, absolutely, enterprises with this BYOD phenomenon where you're bringing your own device to work, such as Android devices and iPhones, we see that as a very large growth market. We launched a product in the second quarter called Enterprise Shield, focused on mobile security for the enterprise.
All right, Omar, listen, I almost hate to ask you this question. You're an industry veteran. You've been around for, what, a dozen years, if not more, ex-Samsung, ex-Motorola, et cetera, and you're talking a good game. You've got a great story with NQ Mobile, but you guys went IPO last year at about $11.50 a share. You're doing about half that now. What are you telling investors?
Well, I mean, our story is a great one. We're growing sequentially, nearly 30% on top line. Year over year, we've grown 127%. I think that, one of the key things that we share with investors is the globalization of our business. Obviously, the company itself was founded in China 7 years ago, but we've grown into a multinational company now. For our consumer business, which is still the strongest portion of our business in terms of size, 54% of that comes from outside of China. So we are truly a global mobile internet services company, and it's really about those results. I mean, delivering 6 quarters of results that exceed the high end of our guidance. Our goal is to continue to build investor confidence by delivering on the promises that we make to the investor base.
To go, look, guy, what about your stock price?
Yeah, our goal, I mean, as we continue to deliver results, I think investors will take notice, and the results is what really drives that investor confidence. So we're focused on delivering the deals and the channels. I mean, we've brought on 4 out of the largest 6 Verizon independent dealers in the U.S. So our goal is to continue to communicate that. I think one of the things that I think you'll see tomorrow, we're holding our first ever Analyst and Investor Day right here in New York. And we'll be able to engage with our investors. So we're bringing in all of our institutional investors that have signed up for it, as well as our analysts. And for the first ever time in the history of the company, we're going to engage them in a face-to-face meeting where we're going to share with them our strategy for the next handful of years, as well as the results. Let them meet the executive team. We're going to do product demonstrations. And I think it's important to drive investor confidence with that real hands-on interaction with our team and our products.
All right. Sounds like a good
Omar,
thing to
thank
do.
you. Thank you so much. Omar Khan there, the co-CEO at NQ Mobile. We're going to be back with our guest host, Yu-Dee Chang at ACE Investment Strategist in just a little while. For now, though, let's get you an update on the situation over in Europe. Eurogroup finance ministers have decided to push a decision on more aid for Greece until later this month.
Eurogroup will further discuss financing needs and debt sustainability at an extraordinary meeting that will be convened on November the 20th, and which is in fact the continuation of today's meeting. Eurogroup expects that by that time the necessary elements will be in place for member states to launch the relevant national procedures required for the approval of the next EFSF disbursement, subject to the Troika's final positive assessment of all prior action by the Greek authorities.
The Troika released their long-awaited report on Greece, saying Athens should get more time to hit fiscal targets. But more time means more money, and the Troika estimates that 2 extra years going to cost another 32.6 billion euros. Now, apart from discussions on where that money is coming from, there is also a sticking point over Greece's debt sustainability. The IMF has set a 120% debt-to-GDP ratio for Greece by 2020 as a criteria for getting the money, but the Troika can't agree on whether or not that is achievable.
It's critical that all chapters of the book be not only opened but closed satisfactorily. That means the fiscal commitments, the structural reforms, the financing, and the debt sustainability analysis, which we will clearly come back to with additional work to be done in the coming days.
Now, on the issue of what happens come November 16th, which is just days away, by the way, when Greece says it's going to run out of money, Juncker says there will be no issue rolling over the roughly 5 billion euros in bills that are due. Well, still ahead on Squawk Box, shares of Research in Motion ending higher overnight after the smartphone maker says twice delayed BlackBerry 10 phone launch is finally going to be pushed through. We'll have the details when we come back. Stay with us. And welcome back. Well, it may be too late for the upcoming holiday season, but Research in Motion has finally set a date for the launch of its make or break all-new BlackBerry 10 smartphone. But that's about all the company is disclosing. For more, let's get over to our Silicon Valley correspondent, John Ford. And I guess when they say make or break for BlackBerry, they really mean it with this device, yeah?
Yes, indeed. January 30th is the day for the big reveal, Lisa. And if you want details like what the new phones will look like, their size, weight, what apps are available, or when they might actually hit stores, the struggling smartphone innovator says we'll have to wait until then. More than 2 months away. But here's what we do know. The new BlackBerry 10 software system is redesigned to accommodate a touchscreen, internet browsing, and apps use that has propelled competitors like Apple's iPhone and Google's Android-based smartphones to dominate the market. We also know that 2 new BlackBerry models will be unveiled. A full touchscreen device is expected first, followed by one that has the more familiar physical keyboard. What we don't know, will it succeed? Remember the company's Playbook tablet? Well, neither does most people, but the company's current software's focus on email and messaging could help it retain at least part of the corporate market that made the BlackBerry a must-have item for millions of workers. And this launch is happening under a new cost-cutting management team, which is in the process of laying off 5,000 employees. Shares of RIM rose 3% overnight, but after those same shares plummeted nearly 90% in just the past 2 years, the future of Research in Motion has a lot counting on the 10. Now, let's send it over to Martin.
All right, thanks a lot, John Forth there live from Silicon Valley. Swing over to Adam Bakhtiar now for a look at what's going on in commodities early Asia this Tuesday, sir.
Well, it was a pretty choppy session, Martin. We did see some strength in the oil complex yesterday on the back of the positive Chinese data that we've been getting out from last week and over the weekend, at least in terms of the export numbers. But, of course, that optimism gave way to worries about the U.S. fiscal cliff, and that was very pronounced in the foreign exchange markets. And there's always a tight correlation between the U.S. dollar index, which, by the way, is still stubbornly holding at that 81 level. So oil did not perform all that well. In fact, was rather fragile in the U.S. trading session. And gold was going absolutely nowhere. We saw gold drop about $3 per troy ounce to 17.27. It's just bouncing about $1 in Asian trade or in electronic trading. Not much love for spot silver as well. But the one good thing, the one silver lining in the trade data or the export data out of China is it helped to reignite some bullish calls on the base metals. And you can see, with the exception of platinum, copper, which is the most widely used and traded, nickel and aluminium, had a very strong day on the London's metal exchange overnight. There's one bright spot in the commodities complex. All right, let's get some expert analysis from Jay Richards, who's the investment manager at GTL Capital Management, joining us live from our Sydney studios. Jay, thank you very much for joining us here today. Talk to us about, good morning to you too. Talk to us about the overall outlook for commodities in general. In a world of infinite QE3, the US elections out of the way, improving data out of China, and the worry about fiscal cliff.
Well, I think the quantitative easing, it's the anticipation of the quantitative easing that's actually driven the markets up at this point. And while I think that anticipation has driven markets up, I think the reality of it all is the fact that commodities in general, pretty hard to speak about commodities in general, but I can speak specifically, I guess, to gold and oil in regards to all that, because there's a range of different commodities. And so I think at this point you're going to probably see gold and probably the precious metals probably continue higher. And I think there's kind of three near-term factors that will support this view. And the first is a weakening U.S. dollar. The second is seasonally gold tends to move higher going into the holiday season in the northern hemisphere. And thirdly, technically gold experienced a daily chart reversal on November 6th. So, you know, when you combine the things that the U.S. dollar in late July found a bottom in September and has retraced halfway back from these levels, it simply appears to be running out of steam. Seasonally speaking, there are several factors that I think can drive the gold market higher, especially during mid-November. The first is really the Diwali festival in India, and in fact today is a Diwali festival. So vast amounts of gold are, of course, purchased and exchanged among hundreds of millions of Hindus, worshippers in celebration of the good over evil.
Hey, Jay,
the second event, listen, of course, is...
Jay, you there? Yeah, just hold that thought, okay? Let's bring in Yu-Dee Chang and find out what he thinks of gold. Yu-Dee? I mean, you're the guy saying keep your powder dry.
Well, I think,
so what about gold?
Yeah, I think gold is has your win, has tail you also win type of market. But I think one thing on the shorter term basis, I think dollar will have some effect on gold. Like you were saying a little bit earlier, dollar is actually stubbornly holding this level. And to me, dollar actually looks like it wants to surge higher. So if that does happen, I think that might have still a short term bearish effect on the gold. But I do agree with Jay. I think on the overall basis, over long-term basis, gold is a buy. But on the shorter-term basis, I think it hinges on the U.S. dollar. Don't you think so, Jay?
Yeah, I think timing's important, though. As I agree with you, I think we're going to probably go up and down. But overall, I think there are some keen factors at this particular time of the year that are going to influence higher price overall, at least over the next 2 to 3 months on gold. And I think we're going to take out the 1,798 high and you know, hit the $1,800 mark. As I said, there's quite a few things in place, and you know, overall, I think if you believe the world is a better place, then you don't need gold. But I don't think the price of gold really indicates that scenario at the moment.
Jay, we're going to have to leave it there. Thank you very much for your thoughts today on Squawk Box. As Jay Richards of GTL Capital Management and Yu-Dee Chang, our guest host of Ace Investment, stays with us for the rest of Squawk Box. Back to you, Lisa.
Okay, thank you so much for that, Adam. We're going to go for a break on Squawk. When we come back, Australia is set to open in just a few minutes, and look who's here to set us up for the trading day ahead. It's Matt. Hi there, Matt.
I'm always here, Lisa, always here this time every morning, but we are expecting a really flat open for the Australian market given the lead that we got from Wall Street. We're watching one company profit report. I'll tell you all about that after the break.
Good morning. Welcome back to Squawk. Well, let's count you down to the start of trade here in Asia. Time now for the final word from our guest host, Yu-Dee Chang of ACE Investment Strategist, who's joining us from Washington, D.C. So, Yu-Dee, last night we had the U.S. markets doing absolutely nothing. What do you think the rest of the week holds? We have so many uncertainties out there with the fiscal cliff, and now another delay in Europe when it comes to giving Greece the next tranche of its aid.
Yeah, no doubt. I think it's going to continue to be news headline related. It's between Europe, the U.S. fiscal cliff, and China. By the way, just to let you know, everybody's talking about fiscal cliff, right? So you would assume that people in Congress will get together and get it resolved. How many days do we have? People says 49 days until December 31st. But if you take away the holidays, take away the weekend, and take away when Congress is in recess, guys, they only have 16 working days, 8 in November and 8 in December to get the problem resolved. So you assume they would, but I'm telling you, that's a big question mark hanging over the top of the market.
And
that is going to be very much the dictating factor.
Yeah, and the Republicans, even within the Republican Party, they're very far apart. So do you think they're going to be able to pull it off, Yu-Dee? Because we have people on here saying, look, relax, you know, they're not going to let the economy go over the fiscal cliff. Are you that confident?
No, I'm not. I think eventually they'll do whatever they do the best here in Congress, right? They will punt the ball, probably is the most likely scenario. That's why we're saying, you know, there's more than one cliff. It's not necessarily everything goes to stop, no agreement, and that's the end of the world. That will put U.S. back in recession. But I think there's a slippery slope more than a cliff, is that they sort of punt the ball, where they're saying, you know what, let's come to some extensions and kick it to the next Congress for them to resolve it. I think that's a very likely scenario. Well, maybe some kind of short-term solution where they compromise and come to agreement on certain tax cuts and certain stimulus extension, but not on all of them. I think all of this scenario will affect the market. So, you know, I mean, you talk about end of the year. If it gets resolved before the end of the year, we'll have a rally in the market. If it doesn't, just look, August of 2011, watch out. There's much more downside to come.
Okay, looking over the edge of that cliff. Thank you so much to our guest host, Yu-Dee Chang of ACE Investment Strategist, joining us there. Well, meantime, markets in Sydney going to be up and running in just a few minutes' time. Matt Taylor previews the trading day ahead. Hi, Matt.